In New York, the Dow Jones went up, but the Nasdaq went down, leaving the S&P 500 index steady on the day. In Europe, there's still a lot of gloom about Spain's problem of rising bond yields because the bond market is going on strike against it. Investors are dumping their Madrid-listed shares and their Athens ones as well, for good measure. And in Asia, they're gloomy about China's growth prospects. Now, the reason US blue chips went up last night, that's the Dow Jones, was that retail sales rose 0.8% in March, which was higher than expected. Good news. But here's a stunning graph of nominal retail sales over the past 20 years, and then the same figure adjusted for rises in prices and population. It's incredible. Actual retail sales in the United States per person have not changed at all since 2000. Australian shares went down again and now have not changed at all for nearly 9 months. There were moderate falls across the board. Some of the largest were AMP, Qantas, Woolworths and Rio Tinto, despite reporting a lift in iron ore shipments for the March quarter. And the Australian dollar was steady against the US dollar, but down a little against the other main currencies, reflecting the fact that today's broad hint from the Reserve Bank that rates are coming down next month was no surprise. New car sales came out today and were a surprisingly large 4% higher in March, but the increase was due almost entirely to very strong sales of four-wheel drives, otherwise known as SUVs. There is now a record high of more than 250,000 a year roaring out of the showrooms and onto our clogged roads. But at least the drivers are up high so they can see how far the traffic jams go. And that's finance.